Hello and welcome to the Fibonacci free video for Monday, April 17th. This is David and let's start digging into the S&P 500. And we've got a lot of uncertainty here. This has been an environment primarily for short-term trading, in my opinion. And even in that context, however, right, we've got a lot of cross currents on the short-term view. If we come in here and just look at this pullback last week on Friday's high, we met upside expectations, right? So reasonable targets after a pullback in here are a move back up proportional to that pullback, with a first target at 127.2% and then a second target at 161.8%, which is pretty much right where Friday's high took us before we started to pull back. But it's unclear if we're heading directly back up to above Friday's high. If we look at it from one standpoint, we come in here and we look at the move up from this low into Friday's high. You can see that, oops, let me just drag this more cleanly, right? All we did was a Fibonacci 61.8 retrace of that here at Friday's low before we started to bounce. But the question is, do we need to head even lower first, right? And a number of reasons to think that that maybe we should. Let's zoom in on this a little bit more, right? If we measure the move down from Friday's high to Friday's low, the bounce into the close today, where is it? It's more than a 61.8, but it's a 78.6 retrace of this move down. But even more than that, right? If we measure the legs up from Friday's low, this initial leg up into a morning swing high here today, and then up from our afternoon swing low, notice that that move into roughly a 78.6% retrace is roughly equal legs up, where this leg and this leg are equal. That is, if this was just going to be a counter trend bounce, it's a really obvious spot to turn back down from right in here. You can also do this on your own, but I'm pretty sure that this bounce right here is 161.8% external retrace of this move down. That gives you a third spot there that kind of says, hey, look, if we're going to turn down, this is the spot. It doesn't mean we need to turn down from here, right? If instead we keep going up, then we know the target one, we just don't know whether we're going to continue down lower first, right? Target one on a continued move up is going to be 127.2% at, call it roughly 41.77, and the 161.8% at 41.94. So getting and holding above this upper channel line here tomorrow, I think would argue towards that 41.77 and then 41.94 levels as target one and target two. So long as we can get outside of this channel line, which is drawn just by connecting Friday's low, connecting Friday's low with today's low, and then a parallel line up here through the Friday afternoon, through today's high. Right. So that's, if we can stay above that level, that's where we target. If we break the lower level, then first target, let's say, is going to be coming in here at equal legs down. So that would be just measuring Friday's drop down from today's high. If we get slightly higher here tomorrow, we may need to redraw that. That currently leaves us right around 4,100 at 4,101. So near that round number, still above the 40-80-30 Voodoo fire line, which we'd need to break and stay below to think we had some long-term decline. So I'm still focused on this short term, focused on it a lot with the micro Voodoo lines, but while those incorporate some Fibonacci aspects, we can use some pure Fibonacci to come up with some ideas here as well. So we'll see how that comes together and be back here again. Henry will have an update for you Wednesday. I'll be back with you on Friday. Until I see you again, as always, good trading. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.